Hello, this is the Tradesight U.S. Stocks and Futures Market Preview and Domestic Outlook for Thursday, January 26th and Friday, January 27th, 2017. Hope you're having a good trading week. We are going to be wrapping up the week here. We finally got a move in the markets, and it was up on a gap and hold. One of the flattest opening hours on the NASDAQ side I've seen in forever. But this gave us the 20,000 number on the Dow, which is going to be real interesting from a technical perspective when we get there in a few minutes. At any rate, here's the ES front month futures contract. It's a daily chart of the broad market and futures forum. So you got a little breakout here. Well, let's look at everything, and then you can get the better picture of all this. Let's go through all the major indices because it's really important what we did today. From a news perspective, obviously, we talked about this a while back. If we could close above 20,000, would that be the big headline, and would that be the top or not? And so let's go through it. Crude oil closes up 27 cents. Not a big deal. Gold down 70 cents. Breaks the 10-day moving average for the first time in a while. You'll note the 13 buy signal on gold was the low. We've come up quite a bit from that recently here. So here's the S&P cash index. Now, what's interesting here is this takes us essentially to the risk line. Let's talk about this specifically. The risk line is 2298.10, and today's close was 2298.37. You can't make that up, right? 0.2 points above the risk line. You've hit it, and now the question becomes, is that the wall that it should be? And at the same time, we're now 8 candles towards another 13 sell signal. You'd have to keep heading higher from here because remember, the 13 has to be above the 8 either way. But even if you do head up, you could still end up in a situation where you get a sell signal within a week or so. Anyways, it'll be interesting. It's going to be interesting to see what this all is all about at this point in time. Let's take a look at the NDX. This is the NASDAQ 100 index, new high again on a gap up. Not a lot of, you're not getting a chance to trade these. It's just gapping up on us, and so whatever. You'll see the intraday action here in a moment. The SOX up 13. It's a new closing high. The biotech's up 28. That is not anywhere near a new closing high. The VIX down at 26 cents. Still holding above the risk line of that buy signal, but this is the lowest VIX of the last year. And you got to remember, we've only closed down here on the VIX twice in the last 3 years. Once in 2014, once in 2016. Both were short-term tops in the market. It's just hard to imagine going much lower on the VIX. It's not a good sign either way when it happens. Trend gets a low reading at 0.75. That brings the 10-day moving average down to 1.14, which doesn't really mean anything by itself. NASDAQ volume 1.75, still very weak, not anywhere near the type of volume we like to see in the market, and that's the problem right now. We're just not seeing a lot of action and excitement. Even whether you go up or down at the moment, it doesn't matter. There's just no oomph to anything. Advanced decline ratio plus 1348 on the NASDAQ. Advanced decline ratio on the New York plus 864. Here's some of the interesting stuff. Google closes up 9. That's a new closing high in Google. Apple closes up almost 2 points. New high for the year on Apple. Amazon up 14. Finally getting almost back, or just above where it was, excuse me, on election day. So it's made its way back up from there. Netflix down 59 cents. Tesla down 14 cents. Wasn't very interesting there either. The bonds got clocked. Coming back to new lows on the bonds. This is just a lot of money coming out of bonds. That's, it's almost like it wants to come out of bonds to go into stocks right now, but be careful. And here it is. So the Dow Jones 30, not something we tend to watch as traders. It's made up of very few stocks, but there's your 13 sell signal. Remember, the 13 buy signal was 2 days. Actually, it was more like 4 days before the election. We were already on the move up before that, but 13 buy signal, we're heading up there, and then broke out to highs and ran. And now here we are on the day that you crossed 20,000 on the Dow. Can't make it up, right? You get a 13 sell signal on the broad market. Target of that sell signal is going to be that red line below, which is about 18,900, which is a ways back. That would be the minimum target typically. And of course, the S&P is working off that. The VIX has got its signal. Everything's still got the signals, just nothing's rolling over yet. But this is a new one on the Dow, so it's very, very important. And we also got it on the diamonds, which you should if you get it on the Dow. All right, let's take a look at the 5-minute chart. So this was the day. Gapped up on the ES, and it was just a drift. It didn't even barely traded 10 points of range for the whole day on the ES. And it's just, there's just no excitement. It's not like we're swinging. It's not like there's a big push. It's just a watching paint dry move up. NASDAQ side fairly flat and contained. By the way, this was the issue today. Look at this. Let's go to 1 minute candles. Let's go back and look at the NASDAQ futures in the open. Look at that. That first hour, first 30 minutes, look how flat that was. 30 minutes of one of the narrowest ranges I've seen on the NASDAQ. That's when all the excitement is supposed to happen, folks. All right, so that is the current state of the market from that perspective. What else can we look at? Well, we've got economic data coming out for the next 2 days. Remember, we don't typically do a market preview for Fridays because everything's played out for the week, so this is going to cover both Thursday and Friday. We've got advanced international trade and goods along with the weekly initial and continuing jobless claims numbers. Those are pretty meaningless right now on Thursday. And then leading indicators, new home sales at 30 minutes into the bell, and then natty gas an hour in. The big one is Friday, the first look at GDP for the fourth quarter, Obama's last quarter in office, and then durable orders. And then you skip ahead to 30 minutes after the open and you get Michigan sentiment. All right. So what are we really expecting? I don't know. I don't want to get too excited about it. I'm looking here at these signals, and you can approach it a couple different ways. I mean, there's sell signals abounding everywhere in this market right now. Whether you start shorting now, if you like to hold positions or hold options, or whether you just start getting ready and play the short side as it plays out, when it plays out, so you've got the direction right first, it's up to you. I have a couple things I'm short at this point, including Goldman Sachs from the start of the year where I'm in the money. But it's going to be interesting to see. None of this, in terms of the volume being light, in terms of the VIX being so low, in terms of the sell signal on the S&P with another one close to happening, in terms of the sell signal on the Dow Jones, none of this looks positive to me. And at the end of the day, keep in mind, this is a big important thing. We'll talk about this in the weekend. Here's the S&P. Here's the monthly chart of the S&P, right? Here's where we've come from. And what you don't see on this one is the volume. But remember, if you look at the last two candles, you're going to see more volume in December than you did in most of the last year. So if we do roll over, that's the biggest volume in the market trapped getting in up at these prices. And that is not a recipe for greatness, unfortunately. Charts as usual brought to you by eSignal. If you've not yet taken a trial of our services, feel free to do so. We will help you out for a couple weeks. Have a great trading Thursday and Friday. We'll talk to you over the weekend.